Welcome to Tech Society, a podcast about all the facets of technology and our society. Twice a week, we deliver in-depth analysis from a technological perspective, giving you our take on things and interviewing people that are doing important things. Now here's your hosts, Alex Dunmo and John Nguyen.
And before we begin this episode, just quickly, is it time for your business to evolve? Yes, it is. So come see Ninja Software, njs.dev. All right, let's get into the episode. Hey techies, welcome to another awesome episode of Tech Society. Today we have a ripper of an episode for you. We are speaking with Neal Cross, also known as the shorts-wearing banker. Neal is an eccentric conservationist, technologist, and fintech entrepreneur. He is co-founder and non-exec chairman of PictureWealth, one of the world's fastest-growing wealth fintech companies, and serves on the advisory board of Razor Fintech. Prior to this, Neal was Chief Innovation Officer at DBS Bank. He drove global innovation that helped DBS achieve the world's best digital bank for 2016 and 2018, and world's best bank 3 times across 2018 and 2019. He has personally been awarded the world's most disruptive CIO/CTO globally from judges Sir Richard Branson and Apple co-founder Steve Wozniak, and is a regular winner of Best Innovation Lab and Innovation Leader Awards. In today's interview, you'll learn what actually is a CIO, and why is the CIO's job to get fired? Why should businesses and their owners be more disconnected with their money? And why have consumers become more connected with their money? And finally, how and why has financial literacy gotten worse over time? Alright, those are your nuggets and more. Let's get into it.
So thanks for inviting me here. I'm Neal Cross, and I'm the co-founder and chairman of PictureWealth. But I've done quite a lot in my career. I started as a games developer. I started coding when I was 11, but that's what you had to do to what we would, consider today picking up a console and plugging it in. In my day, you had to put cassette tape in a drive. You had to type, load, quote, hit enter, and press play on the tape player. So it's technically coding. But I used to write computer games. I've done lots of things in my career. I tried to do very different things. I've worked at Microsoft, I've worked at Mastercard, I've worked in data companies, I've built hotels, I've, funnily enough, done ninjutsu as well. I used to be a ninja, and done Kung Fu and Tai Chi, and actually just started doing Kung Fu again here in Perth. And we live in Perth now, so me and a good friend of mine have a wealth tech company here called PictureWealth. And our aim is to bring financial happiness to the world. And we're certainly getting there now. We're starting to get offices all over the place now. We're expanding to Asia at the moment, Indonesia and India. And, our premise is pretty clear, which is kind of make, finance a bit more transparent, a bit more honest, and try and help people achieve what they want to help in their lives. And because, most of the milestones in life, need a financial instrument. So let's try and educate them on which one's best for them and get them in the right product.
And you were Chief Innovation Officer for DBS. Is it DBS?
DBS Bank,
DBS
yes.
Bank,
Development Bank of Singapore.
For
5 years, yes.
I guess the quick question you've probably already been asked heaps of times before. How did you go from programming games to being a C-level executive at a bank?
Okay. I think it's because it's a one-step journey, I think. I was doing games when I was 11, and by 14 I was C-level at a bank. It's always looking back. 'Cause at the time, I've never planned my career. I left school when I was 16, so I never even did A-levels, let alone university. Yeah, I've spoke at many university campuses, though, so I quite like that. And, I got both of France's top business schools. I'm on their courses. I got ESSEC in March. I'm talking on their global MBA program, and I got INSEAD in April. So I'm talking on their global MBA program. But anyway, so when I look in front of when I want to do something different in my life, I look for what's in front of me. So is there something I can see that, may or may not be worth exploring? The second thing, does it interest me? So is there something kind of near? Does it kind of interest me? And the final thing is do I think I could be kind of, after training and 400 years in the job, could I actually be good at it? And so that's how I kind of picked my career. So I'd always go from, jump to jump in my career. And I suppose when you have that philosophy, then you can go quite transcendental quite quickly. So you can go from one industry into another, because you've got to think of the definition of near and am I good at it? So technology, thankfully, is a great leveler. Even though I didn't go to university, I'm sure that my code was, equally as bad as those who did go to university.
Yep.
And so
we can actually testify, we can confirm that of the programmers that apply for jobs at Ninja Software, the university educated ones are no better than the self-taught ones in general. Yeah.
Well, that's it. I mean, it's and also for me, it's never been around, writing code with a million ends to a means for me to visualize stuff. I just want to tell you, I'm not very good at drawing, and so I did art.
So it's like an art form.
Yeah, I mean, we did. Well, the good thing about software, it took art and made it a tool.
Yeah.
And so someone like me who isn't particularly skilled in any artistic, I'm pretty good at Tai Chi and Kung Fu, if you can call that an art. I suppose you can. But in the more visualistic is, that I could use art packages, I could use code to represent objects on a screen. And so I remember when we used to do games, I used to drive my mum nuts. I used to steal her oven paper. And I used to get her oven paper because it was cheaper than tracing paper. And I'd pull it over a magazine. I was doing this game called GI Hero at the time. I needed they called it a sprite, which is basically a collection of squares. In fairness, that's all computer games are. It's a collection of squares, some with logic, some less logic. But anyway, so I'd put the paper over this soldier, and then I'd draw around it because it's like tracing paper. And then I'd stick it onto a monitor. So I'd pull it over a newspaper of a soldier, do a line drawing around it, some of the features, and then put masking tape and stick that onto a monitor, and then using a really, stage one mouse, kind of click the squares to outline the image on the screen. And that's how we used to do the artwork, the sprites.
Actually,
back in the day.
Pixel art,
I wouldn't be surprised if people are if people are still doing something very similar to that. Because I see these pixel art and I go, how the hell did they do that?
Yeah, well, it's just
that makes sense.
Yeah, you just zoom stuff up into squares. I mean, and now we're in the world of the latest release on console, which is actually something we used to use years ago. Back in, in fairness, not 8-bit, 16-bit. The ST and Amigas was ray tracing. So then the new consoles are doing ray tracing, but they worked out the maths that they only need to trace a certain amount of light, which I thought was absolutely fantastic. So in ray tracing, what you do is you work out the light sources, you know where the objects stand, and you trace basically each beam of light, and then that draws a scene, which is incredibly lifelike. Yeah. Well, of course, the machine to do that, I mean, it used to take hours per scene. And what they realized is actually you don't need to draw all the bits of light. Once a certain destination has so much of the light from the rays, you can stop drawing there. And so that's how come we've got the PS5 and the new Xbox, is they've worked out that technology, and it's as dumb and simple as that.
Yeah.
Stop drawing another ray. We've had enough. This pixel's bright enough. We don't need 100 billion new rays of light on this thing. And so that's funny, isn't it? You've gone from there to there, pixels.
Yeah, ray tracing tech has been around for a while.
It's been around forever, yeah.
But they finally made it fast enough for real-time games.
Well, that's what they did. That was the trick.
Yeah.
So it got quicker, but then they improved the algorithm and realized that the incremental value of drawing, say, 1 million, beams of light versus 10 billion, the increment improvement's like 0.5%. So why should we keep drawing the rays of light? So.
Especially for real time. For a movie, okay. Fine.
Yeah, that's true. Yeah, you've got all the time in the world.
Yeah.
I mean, the things are blended anyway, yeah. I mean, films and games, all the same thing.
Yeah, definitely.
It's just like data and pixels.
What's more fun or rewarding, video games or fintech? There you go. I said the word.
Oh, no.
Fintech.
Oh, the F word. You have to get the F word in there. In fairness, I struggle to, I try. In fairness, I do try and sit there and kind of get excited that I'm in a fintech and I'm in a startup and it's cool. I could buy my own beanbags if I needed to. And but it isn't like that. It's like me back here being a games developer where, there was 3 of us in an industrial park in the middle of nowhere in Somerset in England in a small town. It's pretty much that. So, but we've got like our own building, and we've got a view of the East Perth Power Station, like really close up. But it's just like, I'm not gonna put sugar on it. It's working at a small business. I mean, in fairness, the reward, the expectations and reward are bigger, but I think conversely, the likelihood of failure is also higher. And so, from having a small business, so maybe you go out for a certain level of reward in a high growth startup like a fintech, you'd be playing with different kind of ROI on that thing. But the same building, and we got 60 staff across Australia.
Wow.
I used to work at, I had a bigger team at DBS Bank, but they're working for 100,000 person companies down. But we've had very good growth.
So you went from being a chief innovation officer to now running your own fintech startup. Which is more innovative? Is having the capital behind you of a large bank like that allow you to do more innovation, or does actually having a limited budget that you need to work within provide you more opportunity for actual real innovation?
That's a very interesting point. I think they're very different innovation. Practices, dichotomy, completely different. One's really around, and it's not so much about delivering innovation at a bank, it's about affecting change. Yeah. My thing is, your job as a chief innovation officer, and this is where a lot of innovation leaders fail. Your job is to get fired slowly while affecting change.
Yeah, that's true.
And that for me, that's always been my mandate. I know I'm going to get fired, because you end up in all sorts of problems you never thought you'd run into. I was very lucky because I'd spent a good part of my career, I was at Microsoft 7 years beforehand, yeah. So 7 years, I ended up running $1 billion US business for them out of Asia, running their banking and banking, cap markets and insurance business. $1 billion US a year in sales. And so, yeah, I know, but it sounds great. But really, if I took the whole year off, it'll come in at 0.9999 billion. And if I worked 24 hours a day, it'd come in at 1.0001 billion. And so, when the numbers get that big, it's not like, aha, look at me winning the $1 billion sales. Oh, no. And so you have a different strategy even at that end. When you're at that end, it's really about field enablement. Yeah, it's getting the people to be better at selling. Yeah,
yeah, and
then managing the partnerships to get other people selling for you, and then at the same time, working the big deals and bring the credibility. So it's very different. Business selling $10 or $100 million to selling $1 billion a year target. But what that did, it helped me that when I went into a bank, I was still selling. And getting some of the personalities on board to, do something new, do something interesting, take a bit of risk. They're both incredibly difficult. I would say actually the harder one to do is a bank. So I think about, the successes in finance innovation, people who've really, or teams that have been really seen to make an impact at a bank are less than the amount of successful fintech companies by some way. Yeah. By some way, I would imagine, because you're dealing with billions and billions of dollars of valuation of business, tens, hundreds of thousands of humans as staff, tens of millions of humans as customers. Yeah. It's a huge thing to jump in the middle of that and say, right, we need to do this differently, yeah, because we're going to digitize, transform this, and that's very different from a startup, which is essentially getting very quickly to a point where you think you've built something to solve an interesting problem that's monetizable, and then growing that business.
You're known as the short-swearing banker.
Yeah.
I think is what how Financial Review referred to you.
That's right. Helpful Review.
Could think of something else.
Yeah, that's sounds similar.
How did you go operating in these fairly conservative bureaucracies as the short-swearing banker?
Yeah. I think I did rather well. I tried to stay very honest with it, because there was quite a few people who taught the game around innovation. I'm cool and I wear T-shirts and shorts. But then I see them at conferences and they're wearing 3-piece suits.
Yeah.
And I'm wearing a T-shirt and shorts. And so, there's that was quite interesting, watching that. I think the thing is I found in my career as a leader, if you're going to do something, you might as well do it. Yeah, you might as well go all in.
Lean right in.
And do you know where I learned the shorts thing from? It was from Microsoft. So I went to Microsoft every year. They do a conference for about 20,000 people. Yeah. And a global conference. So their staff base when I worked, there's about 100,000. I think it's a bit bigger now. And they usually rent a whole city like Atlanta or Las Vegas. And the conference is in the big football stadium. And the first one I went to, I think it's Atlanta, I was just blown away. This is Microsoft. I love, I used to program when I was a kid, write games, blah, blah, blah. Bill Gates, my hero. And the head of HR came on, Lisa Brummel. And she was wearing cargo shorts. And I was like, my goodness, this is one of the world's largest companies. And she has come on their global conference wearing cargo pants. And then I don't think she's ironed them. and I was like, that was about, my first job in Microsoft was Microsoft in Sydney. And I think I went to their conference about 2000, when I was living in Sydney from 2006, 2011. So I think it's about 2007. And it just stuck with me. I'm like, when I'm the boss, the shorts are coming on. I thought, how? And then it just ended up being this interesting thing where I'd always dress a bit weird. And then people, because I think you make a decision about someone quite quickly. And so if someone's very unusual, you've only got really two endpoints in that decision. And one is they're just hopeless, or one is they must be a genius.
Yeah.
And so thankfully I'm neither. But, when you take an analog thing and you digitize it and it's binary, it's 1 or a 0. Well, obviously Neal's not a complete idiot, so he must be a genius. It's the only other box left. And so anyway, but I thought it was quite fun. And then, and then people expected me to turn up. One of my big things was, because I left school with no qualifications, was I really dislike elitism.
I agree.
And I think that really you should just be judged on, the kind of person you are and the person you are today and what value you can bring and, what experience you've got and, what are your values and that kind of stuff. And so I was just trying to replicate that I can get away. I went to G20. Now, in fairness, I didn't wear shorts when I spoke there, but I wore cargo trousers and a T-shirt. And I turned up and they looked at me and they, oh, Neal, thanks for coming. Have you lost your luggage? They were looking me up and down, and I thought I had lost my luggage because I lost my luggage before. I used to travel a lot. And I realized that, oh, no, I'm just going to go on stage like this. That's all right. She looked at me and she went really white. She said, are you sure? I said, yeah. I said, it's fine. It'll be fine. Because I thought, why not? Yeah, because then if I can get up and I'm going to tell them, I'm going to start with you're all wrong. So I thought I'll just sell it up perfectly. Basically, look like one of the camera crews jumped on stage. First thing he says, you're all wrong, a G20, and go work the rest out from there. And it went down really well. So I ended up getting all these on these weird committees all around the world, mainly around regulation and governance and tech companies.
Yeah, so I'm really glad you brought up G20 because we've talked about it before. Can you give our listeners a kind of recap of what you told?
I said, look, I love working with the central banks at the moment because it was a collection of the central banks. I was between the German finance minister and the governor of the Bank of England. And it was me and the chairman of WeChat. And so I was chatting to him beforehand, actually, and he said, oh, Neal, I've always wanted to ask your opinion about WeChat Bank. I said, oh, how's it going? I said, I like what you did with your, digital ID, photograph with your ID card and, QR payments. This is back in 2016. I said, really, very nice. I said, what's your problem? He said, we've been around for 2 years and we've only got 100 million customers. And I'm not happy. I wanted 200 by now. And of course, I'm sat there, like looking at him, thinking, and I go, Yes, I would be seriously disappointed with that as well. Talk me through your concerns. And of course, at the time, DBS had like 8 million clients and been around for 50 years, and a very good and profitable bank, believe me.
Yeah.
And WeBank's been 2 years; they've only got to 100 million clients. Obviously, that's a real big disappointment.
China scale.
Yeah. So I was like, and then I said, I should think about. When you think about KPIs, it sounds like what you're doing, you're driving too much top down from your leadership.
Yeah.
And then trying to drive them on KPIs, which are just about individually them and their boss. Have you thought about crossways KPIs to get more of your different divisions co-innovating across the platform and driving so your customer service people are connect to your product sales people and your tech people? So when the tech's down, the customer service suffer, blah, blah, blah. And he said, that's amazing, thank you. He said, how many customers, how is DBS going? How many customers do you have? And there's me. I'm like, well, I think they're doing the mic check. I'll come back. And but I got on stage and my talk was that the bus is coming the other way. And I said, look, I love the fact that the central banks, central banks in Australia would be like the RBA. I said, but a lot of countries, the central bank plus the regulator, like Singapore, would be RBA plus ASIC plus APRA, all the regulators in one. But anyway, so I said, I love the fact you're looking at fintech and you're exploring it and you're doing stuff like sandboxes and you set up innovation teams. I said, it's quite funny watching you innovate because sometimes it's like watching your grandparents learn to skateboard. I said, it's interesting, but like a little bit scary and uncomfortable at the same time. But I said, I think the thing you've got to think about now, you've got to that understanding is look the other way. The bus is coming the other way. This is the problems coming from the tech companies, yeah? And I talked through really how Google makes money, how, Google and Facebook and the ad-driven model how it makes money, about how they layer on the data. So if they know what you search on, then, Google can sell an ad from an advertiser to you for, say, $1. Yeah. If they know my name's Neil, I live in East Perth, my age is this, then it's $2. If they know my payment history, it's $10. If they know my medical history, it's $100. So every time they layer on a new sheet of data, the value literally goes 10x on that person as a sell to from an advertiser. And I said that's their model. So that when they move into finance, it's not necessarily they want to build a sustainable finance business which is healthy for the ecosystem. Yeah. It's just they can outprice everyone just to get the data. Yeah. So they could go in and actually pay people to pay. They could go in an industry where you pay to pay and turn it into they will pay you when you pay, because they maybe lose money forever in this business, but when they move it over to their advertising business, they're making 10x. I said, it's unfair. I said, they could always lose money, but end up making money. Yeah. It's not like fintech who will eventually run out of venture capital money if they're outpricing the incumbent, which, that we've seen some of that happening. Or it's a bank, invested and they've got a big stack of cash, like $1 billion, giving high savings rate like ING and Orange and doing it, in quite a more transparent and like simplistic way. Yeah, loss leader, but hope to make the money back as they grow. This is just pure. They're in a different business. They're just mining this industry to 10x the other side. I said, you can't let it happen.
It's a vertical integration that no one outside of technology can even see. How's your focus from that perspective on PictureWealth? I know you kind of said the mission already, but if you could expand on that.
Yeah, so the do good on that is really we're very focused on, we want to educate people on their money. Yeah. We want to remove that veil, that opacity, that people buy products they don't understand. And, all my life I've bought products I really actually don't understand.
Like financial products.
Yeah, tech products I do understand, funnily enough. But finance products I don't,
Yeah.
And, part of that is, the organisations that say they make more money if you're disconnected from your money. And this is the talk I did on Rotto, that years ago, we used to be a lot more disconnected with our money. If I managed to make money, maybe I'd been successful in business, opened a cloth mill or whatever, I'd give my money to a banker. A banker would invest my money a few hundred years ago. It'd usually be invested in bad stuff.
Yeah.
And that would be wars, colonization, opium, all stuff we consider bad to, slavery is obviously just bad, full stop. But also stuff that back then seemed good, but today seems bad, like steel, coal, this kind of stuff, nuclear. But generally, the money would flow towards bad. The biggest multipliers were in funding bad stuff. And but recently that's changed. The likes of, obviously, we're talking about Musk and others, but money's flowing into impact investing. It's flowing into renewable energy. It's flowing into, pollutionless transport, pollutionless steel manufacturing. So it's a really interesting moment in history that actually, because the consumer's more connected with their money, they want to know that it goes to do something good. Whereas before, only select people had money, but zero education, give it to a banker who would multiply it.
Whose only goal was the multiplication.
That's it, because that's what the commission on. So what we're trying to do, we're trying to educate people who never buy anything from us, and we're more than happy with that. We have a free tool at PictureWealth.com, get you closer with your money. We have a financial academy, we've just added to that, and good. Never even talk to us, never buy anything. For those who realise as they've gone through the journey and understand their money better, they want to make, a change. They want to be more successful in their life, their career. And financially, or they have a big milestone coming up, like a wedding, a new home, divorce, etc. Then come talk to a financial planner. Yeah, that's right. Yeah.
What do you make of banks refusing loans, even home loans, car loans, based on the kind of spending people do? So not even their financial. Would you like some more?
Okay, yeah. I think banks should lend to who they want to.
Well, no, but so like
if they don't want to lend, then they shouldn't lend.
But the algorithm,
someone else will lend the money.
Well, the algorithm spots that you buy Uber Eats twice a week, and they say, you're irresponsible with your money.
Well, the example I've got is that I've tried to stay very human as I've got older, as I've climbed higher and did bigger and bigger jobs, and tried to keep at least my ego in check. But the point is, I've kept friends from school days, and on Facebook, I met a company that score across Facebook, and and they scored across my friends, so they wouldn't give me a loan.
No way.
Yeah, and I was like, of course you wouldn't. I said, because they're my friends from back home, and I grew up in a small town, and of course you wouldn't.
But that's.
And that's my point.
Weird. That's weird and kind of evil.
Well, it's natural when you're trying to, and I think this is why I like Judo's model is, so think about at the base level, the shift from analog to digital. So analog, and I mean in the very broadest sense, not even talking about, the electrical signal, but in the very broadest sense, we try and take something which is very human and fluid and curvy and stick that into boxes. And sometimes we only have so many boxes. So when we saw the first digital cameras, we only had, a few hundred boxes to represent a photo in the first computers, and they looked really ugly. As we got more boxes to drop them in, more pixels, if you will, then the pictures look better. But we're still trying to take something which is very much alive and fluid, and trying to box it up. And as part of that, back to credit scoring, we do that in credit scoring. Yeah. And so if you just tried to do a digital score for me based on my Facebook friends, it probably wouldn't be a good score. And so I think you've got to balance. You've got to balance the things. I mean, I used to write credit scoring algorithms. I used to work at Dun & Bradstreet in the UK. Wow. Yeah, so and I do business scoring. But you've got to balance between the hard data, and the hard data is job, income, age, blah blah blah. You've got the influential data, female, the lower risk, these areas, blah blah blah, that you live in, and this education level, and then you've got the kind of social data. You can mix into that, and then you've got the stuff you can collect that might be going through in Southeast Asia, bank transactions or taxi buying, or how often you charge your phone, and then how fast you move your mouse, how many capitals you use, and how much stuff you buy for e-commerce. But at the end of the day,
whatever you can correlate.
Yeah, I mean, at the end of the day, people always not give credit, and there's always other people to give credit. Now, thankfully, we live in a country where it isn't like, say, in Southeast Asia, where at one end you get loans from billionaires for nothing, private bank, and at the other end you've got a village gangster who will probably cut your arm off if you don't pay him back. Thankfully in Australia we don't have that kind of broad selection, so most people's lending needs are coped with if not in the primary, then in the fintech or even in banking. There's plenty of great players in the market, like Pepper give loans, especially to people with bad credit scores, help them improve their credit scores. There's always a market for it. Yeah. But thankfully in Australia, the bottom end don't have to go to the really unsavoury lending types, whereas in many countries in the world they do.
I guess that's the.
But fintech's helping now a lot more.
So that is the. Oh, you see it in movies. Even in the US and the UK, the guy would fund his business by going to the local loan shark, who's the local gangster, and so we don't have to do that here.
No, best not to.
Unless it does happen and we just don't realize.
I'm sure it does.
It does happen.
Yeah, of course it does happen, but
there's no need for it. I suppose we have enough infrastructure.
Yeah. And you'd have to be. I mean, in fairness, also to think about it, it's a great check and balance. Maybe you shouldn't have money given to you. No. I say it like if a bank says no, you can say okay, and then a fintech says no, and then a social enterprise lender says no. Maybe you shouldn't be getting money. If there is those levels, because they are safety checks to say, can you pay it back? Are you responsible enough to return that money to me? And if there is a depth of lenders of different levels and different outcomes, and they've all said no, maybe don't borrow the money. But in other countries, you've only got literally bank or gangster. And so what we're seeing in fintech and just generally is that filling out anyway. Because fintechs are starting, banks are getting scared, so they're dropping their game into more consumer and blah, blah, blah. Then there's fights over the middle between tech companies and card companies and others.
Back to PictureWealth, actually. So you've created PictureWealth as a way to help people and improve their financial literacy.
That's right.
Do you think financial literacy has gotten worse as we've become more connected? And is that why PictureWealth was created?
No and yes and maybe. I think we've become more connected to our money, a lot more. I think, but what's happened is it's become more complex. So historically we were very connected. So whether it was a shell or just pure barter, I'm the guy who makes the arrow tips and I swap them with the person who gives me the corn, and my wife grows some potatoes and I swap them for blah, blah, blah. And I'm very connected. It's like live or die kind of with my money, but it's probably not money, it's more barter and that kind of stuff. And then I think we become disconnected when our money was around, it used to be beer and some money. And that's because you couldn't never drink the water. I'm thinking like under Middle Ages, Dark Ages, Middle Ages. You couldn't drink the water, so half you paid was beer, and you drink that during the day, mid-strength, obviously, and half your money was actual money, but there wasn't much you could do with it, and so you were kind of screwed. And then I think people become more connected with their money as we got more people into property. I think that's, we got more objects, as a race. And we got houses, we got cars, things and cars. And I think people are more connected with that. Then I think as it become electronic, we become a bit more disconnected. Because it's always, for me, it's not about the human so much being connected. It's also the object. So I've got a pool, I've got a number. And that's literally it. I've got a number, and that number is my total assets. And that's minus my total liabilities, and then they go on to different objects. And so
your net worth.
Your net worth is a thing. Yeah. And that's what we're trying to bring, is just basic that transparency. So I think we've become more connected as humans to money, but the amount of connections we require has gone up. So it looks like you could say we're a bit less disconnected. We used to be. Actually, I'll say I think we're about the same, but we've just got more stuff to worry about now than ever. And that's the problem we're trying to solve, is we want people to really understand where they are. Because a lot of money problems aren't caused by lack of money.
Yeah.
They really, in fairness, let's be truthful, they're caused by just, not caring. Yeah, that's it. Yeah, it's just I don't actually care that much.
I just want
about
that
my
thing
money. I
now.
want that thing now.
Yeah,
I don't care enough that I'm going to delay that. And that's fine as well. We're all like that. Yeah, but I suppose we're trying to find a balance. Can we do something for free to help people? refocus a bit more on their money so they can be a bit more successful with that. Because the difference between people's, personal happiness and their money, there is a sweet spot. If you've actually got too much money, you're not that happy. If you don't, I know we all laugh at that, but apparently it's true. If you don't have enough, you're obviously not happy. But there's a sweet spot if you have enough, but also that you understand it.
Yeah.
Like me, I'm very lucky. I don't have children. I don't intend to have children. It's a personal choice. And that's not bad or good thing, but for me, I have certainty.
I was going to say financially, it's a lot more
stable.
Stable.
Certainty. And I'm not saying having kids are good or bad, but I have certainty. So people who have kids also have certainty, and maybe the tools can help with that. Yeah. You know your assets for your liabilities. You know how much you got left to pay off your house.
And in fact, when you have children, I've just had a child, so I first time I've ever had to think about this, but now I am thinking about where my money's going after it's not my money anymore.
No, that's it. And you're more serious.
Yeah.
And you definitely need to buy life insurance, and maybe you can come to our offices next time. But and that's a good point. The big, milestone events in our life, whether it's good or bad, and kind of it seems to have worked out that it's good, capitalism is kind of good, are powered by money. Yeah. And so, but then our day-to-day stuff's powered by money. So how do we create a balance? How do we educate people on difference in good between bad debt, people, and try and, there's a lot of people who don't care. Yeah, I got enough money, I'm good, that's fine. You're not a client. We've got people who, so that's interesting, play with it and then want to get a bit more serious. They want to get life insurance, they want to maybe get in a lower cost super, they want to make changes in their life. And also that's the things that a lot of banks don't do. We try and solve problems. So if you come to us and say, hey, I'm thinking of having a kid, or I'm thinking of moving out of home, or I'm thinking of getting divorced, whatever your problem, we can help you map out the financial strategy to get there as well. Yeah. And that's a big difference. I want to bring that back. It's not just about technology, it's the human plus technology. So that's why we got about 80 advisors across the country.
Giving that access to normal people.
Right? Yes, that's right. Reducing the cost.
Because normally that was set aside for people in the $300,000 a year bracket and above.
That's right. We can do it at a lower cost. We have a new product which is about $70 a month, and that we'll do all the basics for that. So we'll do the Centrelink work. You get the technology for free. It's all kind of just basic and insurances, finance stuff. You won't get a full financial plan. Yeah, oh my goodness, not yet. But we can then do them as one-offs as well if required. But just the base level of doing a lot of the basic finance stuff, we can manage that for you now. So that's what we're trying to do, bring it to the masses, take something that was usually held for the people with more money, the wealthier, taking a lot of the cost out of that, improving that as well, and then distributing it more to the masses.
We actually have a question we ask everyone. Yes. That is our actual ending. Yeah. We always ask a whimsical question.
Okay.
I don't know. You're into martial arts, so I'm not sure if you're into mixed martial arts. And I'll have a splash too. But the fighters, they have their intro music, right? So they come out, lights go down, fog machine starts. Their music starts that captures their character's personality and
I see where this is going.
Yeah. What is your intro music? So I've just paid you your fee to talk.
Keynote
speaker.
Me. Well, in fairness, you have paid me in whiskey. Yes. It would be a bit of
delicious whiskey from East Perth.
Thank you.
Whippersnapper.
Whippersnapper. Upshot.
That's right.
Whippersnapper. Thank you.
What is your intro music?
Mine would be by the Britpop band James, and it'd be Getting Away With It All Messed Up, which is my story of my career.
That's beautiful.
It basically says it's all messed up, just carry on, just get away with it.
Awesome.
Keep going.
No plan is the best plan.
Cool.
All right.
Well, thanks for that.
Yeah, thank you so much. That was awesome. You've made it to the end of another episode of Tech Society. Thanks for listening.
On this month in tech history, March 21, 2006, the Twitter co-founder Jack Dorsey sends the world's first non-automated tweet. He says, inviting co-workers. A note to future entrepreneurs. When doing the first of anything, it may be for posterity, so try to be interesting. Okay, thanks.
Make sure you hit us up on Twitter @Tech Society. Head over to the website, subscribe to the newsletter.